Good morning, good afternoon, or good evening, and welcome to the Wednesday, the 18th of September, Fed Day. The Fed Day Bull versus Bear webinar with Steve Miley here on the Call for Trade Day. Welcome, everyone. Welcome. We'll go through our usual regular run through in a day. It's going to be fairly brief because it's all about the Fed, right? It's all about the Fed, so I'll keep it fairly brief because there's really not much to say in here, guys. We've had some UK data actually this morning, CPI data and EU and UK CPI data in here. You can see it in black, meaning pretty much in line with expectations here. A couple of the data points actually in red. Now, red's not negative for the economy; it's actually a positive because it means the data is below expectations. So it means it's negative potentially for the currency, meaning the currency going down, but positive for the economy because it's slowing inflation. But these are not the really big numbers in here. And the UK was the PPI input number. There were fears that the UK, there were some forecasters saying that this CPI data could have ticked up, and it didn't tick up. It's been flat. So that's a positive. Eurozone, the month-on-month number was below expectations, so that's a positive as well. Data from the US is light through the early part of the session. Housing starts, doesn't really do too much. Building permits to the market. Do get your regular weekly crude oil inventory data, but it's all about the Fed. 2:00 Eastern time today, interest rate projections as well. So we get the dot plot chart, so that's going to be important. And 30 minutes after at 2:30 press conference. Remember, it's only at the point at 2:00 when the decision is made and released that you can't trade for 2 minutes before or after. So no trading. So from Eastern time from 1:58 through to 2:02. No trading from 1:58 to 2:02 is one of our embargoed. One of the few data points, or not necessarily data point in this case, it's a central bank, or one of the few events that we have in that you can't trade over. So 2 minutes before, 2 minutes after, either side of 2:00 Eastern time today. No trading over the Fed. The market's it's a bit of a knife edge, or the market is shifting more and more towards an expectation of a 50 basis points cut. Less than 50 basis points. I think if we get a 25 basis point cut in here, I think the market might be slightly disappointed. So you might see stocks move lower unless the dot plot chart and the language in the statement is particularly dovish. Okay, so if you get 25 and dovish forward guidance from either the dot plot chart or from the dot plot chart and from the statement, then the market might be okay with that. I think you could see it sell off and bounce on that kind of scenario. If we get a not particularly dovish statement, not particularly dovish dot plot chart, and a 25, the market will probably sell off. If we get 50, and a dovish statement, almost certainly up. If we get 50 and then not particularly dovish statement, if we get 50 and then a wait and see kind of statement, the market might be disappointed in that as well. So 50 might not be bullish either, because the market very much has started to price that in now. Let's look at 5 things to start your day. It's all talking about the Fed really in here. So first of all, Fed Day. Market wavers yesterday was up and down in here in the US, and then overnight we're kind of slightly mixed. European indices slightly lower this morning, with Asian indices up. Warnings abound in here about the bond markets pricing in too many cuts, getting ahead of the curve. Some Bitcoin stuff in here, bullish Bitcoin. And then Google did win a court fight with the European Union, so that's a positive for Google anyway on the overnights, stepping away from the Fed. So not really much to add, guys, really. It's all going to be about the Fed. I'm not going to stretch this webinar out. Just run through the headlines. So look, flirting with records, as in that's record highs for the certainly for the S&P and Dow, as Fed rates finally fade. US futures edge high and watchful move before Fed in here, and having had a choppy day yesterday. Futures trade waters, investors brace for Fed cut. It's all the same. Fed to kick off rate cuts, signal next steps. So that's going to be the thing in here. We'll scrutinize the press conference, also the forecast, sets the dot plot charts in here. We have coming Fed rate cut at hand, debate swirls over how big a move. We know all this, right? Gunlach in here, he's thrown his hat in the ring, saying he sees a half-point cut. He sees the Fed already being behind the curve in here. So we'll wait and see whether he's correct on that. Record wages on Fed cut at risk if Powell fails to go big. Bets on October Fed fund futures top any activity since 1988. So big bets on a bigger cut in here at the moment. Positions will be upended if Fed only moves by quarter point. So the money is on a bigger cut now. Okay, Kimco sees market getting ahead of itself on Fed bets. Kind of already spoken about that. Google wins that fight. There's the actual article on that with the EU. And then on the overnights in here, Asian indices actually up 0.5% on the Nikkei and 1.37 on the Hang Seng. European bourse is down in here. The FTSE, UK FTSE down 0.6 in here. We have the DAX, little change, really slightly lower, and the French CAC nearly down 0.5%. And if we look on the overnights in here, we're slightly better in here. So the S&P and the Nasdaq between 1 and 0.2 higher, with actually the mid cap doing pretty well in here. The S&P mid cap 400 doing well, up nearly 0.2%. But look at the way this has shifted over now. This is the left hand column in here, showing 0.5 point rate cut. So 63% now priced in, 63% chance of a half rather than a 25. So the market is certainly expecting a bigger cut. And yields, although they're kind of tracked a little bit higher in here overnight, generally we're staying this bullish lower yield move. So bullish on prices, lower yields, and that is reflected in all our analysis here. So we did get a slight dip yesterday, dip notably in the belly of the curve as well. The 5-year looked a little bit more, and the 10-year looked a little bit more than the 2s and the 30s in here. But nevertheless, markets in here poised into Fed, and then the stocks in here did nudge a little bit higher. S&P 500 took out the previous peaks in here from August, September. And then dipped again lower. Nasdaq still a way to get back to those August peaks, let alone going back to the all-time highs from the summer. So, but still pointing higher. We're just in consolidation mode. No surprises in consolidation mode. And, looking here, I would pretty much look for a breakout of yesterday's range. So you kind of tested higher, tested lower. We're right in the middle of that range. I think, you go with the breakout from the range here. Do watch out for a dip and a bouncer. I think that's the risk to the, we could just go straight one way, down or up, right? But there is a risk, I think, of a dip and a rally in here if the market sees the initial, if we get a 25, but then the forward guidance is kind of quite dovish in here. So you need to watch out for that. It could be choppy. And we could get a reversal as well on the Q&A, the press conference, half an hour later at 2:30. So watching out for that as well. It's flip a coin on the outcome, guys, today, and so it's a little bit flip a coin on the direction. I think you have to be flexible with your trading today and go with what your signals are telling you, but just be careful about markets reversing quite quickly and easily in here. That could easily happen as well. I'm going to wrap it up there. There's not much more to say. It's all about the Fed. I think it's going to be very quiet ahead of the Fed. If it was me trading, I wouldn't even be looking to trade ahead of the Fed. If I was day trading today, I wouldn't be even contemplating trading ahead of the Fed. There'll be plenty of opportunities post-Fed, so wait for those post-Fed opportunities. Okay, I'm going to wrap it up. I'm going to wish you all a great trading day. Helmets and goggles on for 2 o'clock Eastern, and we'll be back with you tomorrow. I'll be back with you tomorrow to pick through what the Fed have said and the outcome and see where we are in the markets. All right, take care, guys. Bye.